about your investments. We're just a touch away. Monday to Friday at 12:30 p.m. only on Bloomberg Quint.
Good morning and welcome to Bloomberg Quint, India's first digital live streaming business news service. I'm Neeraj Shah and you're watching Indian Open. Let's go straight to the headlines at this hour. Current tiff with the RBI is about substance and not protocol, according to the government official, adds that some issues have still not come out in the public and maintains that government RBI communications are supposed to remain confidential. India jumps 23 places on the World Bank's ease of doing business rankings as getting construction permits and cross-border trade get easier. Larsen and Toubro beats analyst estimates in the second quarter, partly aided by an exceptional gain, maintains revenue and order inflow guidance for the rest of the year. Jaguar Land Rover cuts down its capex by £500 million as uncertainty in Britain and China demand hurt sales. And the country's largest home mortgage lender HDFC and fuel retailer HPCL will be the two nifty companies that will be coming out with their results today. Well, there is more ammo for the bulls, I must say. But before we get to that, let's just take stock of what the world markets did. The S&P 500 posted the worst monthly loss since 2011. That's going back a long way. So while yesterday's session was a good one and strong earnings helped salvage some of the losses for S&P 500 over the last couple of days, the worst monthly loss since 2011. We'll get to Nifty in a bit. First, the world markets. So worst monthly loss since 2011, and strong earnings, as I said, helped salvage some losses for the S&P 500 in the last 2 days. And if you just look at the world market chart or the world markets as they are placed in the session today, it's a mixed bag of sorts. There is a bit of a mixed bag situation right now in the world market. So the SGX Nifty is up about 1/3%. Shanghai is down up about 1%. Nikkei is down about 0.3%. So the world markets are all over the place. It's the mixed cues that are coming in from all across the world, despite the fact that US markets had strong last couple of days and they're staying put. Now, come back to our markets and what our markets have done in the last few days and in the month of October, in fact. So 4.9% fall in the month of October, which means it's the worst October since 2009. And that's telling quite a bit. Usually October is a strong month, but this is the worst October since 2009. And now if you can get that chart on the screen, it'll show you a big red blob in the month of October for our markets and then drag all the way down. It goes down all the way to 2009, where we had some losses. So the Nifty hasn't had a particularly great the last couple of months. More importantly, the month of October hasn't been that great. But can the months of November improve? That's the question that we'll try and answer. Just a bit of a recap though, before we move any further. The Nifty November OI down about 5.5%. The Bank November OI up about 1.7%. And the ranges stay at the 10,700 to 10,000 range. So the call options, the maximum OI is still at 10,700. The max OI for the November series on the put side still at about 10,000. This despite the rallying trade yesterday. So those levels stay as is and flows continue to go down. So while yesterday was an okay day on the FI flows front, but this has arguably been the worst month in the current financial year. Going back all the way to April, we haven't had such a large outflow in any of these months. So October turns out to be the worst month for FI flows. Can we expect some bit of positivity in the month of November? That remains the question. Some ammo on the ease of doing business rankings, and I think there's a big news that came out post-market hours, not from a markets perspective alone, but from a country perspective, that India has now climbed 23 points to be the 77th place on the ease of doing business rankings. It's now the top ranked country in South Asia. I don't think this happened too many times in the past or ever at all. So this is big news, and we'll dwell upon it a bit later on post first word as well. But just to bring viewers up to speed, that amongst good news that have happened, this is certainly one piece of news that has come out. However, what do we watch out for in the session today? Firstly, aside of the nifty numbers, HDFC and HPCL, I think the October auto sales numbers would be important ones to monitor. I think these numbers might get impacted due to a slow start to the festive season. We'll start off arguably with Bhatia at about 10 o'clock or thereabouts, and then the others trickle in. But important to monitor all of these. I won't dwell too much on it because Yatin will come in and talk about them on first word. But do monitor the auto sales numbers during the course of the day. They might be stock moving. What will be stock moving at 9:15 or 9 a.m. as the case may be? 3 or 4 names, 2 large caps, 2 mid caps that I think are very important in addition to results as well. IndianOpen Bank, now some numbers have come out. They have exposure of about 3,025 crores. To the IL&FS group, 1.8%. The stock has been under a bit of pressure the last few days. Yesterday, almost everything went up. But let's see what happens in the session today to IndianOpen Bank in particular. It might be safe to assume that United Spirits won't have a bad day. It's approached the results with a bit of a bang, really has done really well in the run-up to the results. But the numbers looked okay. So the revenue numbers at 2,028 crores, the estimates were 2,156 crores. So versus estimates, the revenue numbers have looked very strong. Similarly, net profit up 69%. The estimates were 177 crores. I think the quarter, the gone by is one thing, but what it did compared to estimates is the bigger thing. And on both of those counts versus the estimates, the revenues and the net profits have looked very strong. Even on the margins front, 19.4% versus an estimate of 15.7%. I think that is important. That versus estimates, United Spirits has just done phenomenally well. And let's wait and watch if this stock reacts in the session today or no. I would presume it could, but it's also run up a little bit ahead of the numbers, so let's wait and watch what happens here. Viatech Vabag, the company's backed about 1,000 crore order from Middle East for sewage water treatment. It's fairly large order compared to the size of the company, and it's yet another order that has come in for that company. So could be an interesting one to monitor. Not a very liquid stock, but could do well. And KEI Industries, the numbers look reasonably strong. They've announced new capex, small capex, but they've announced new capex, which shows the confidence of the management in the years or the quarters to come. So this one could have a positive move too in the session today. And then of course, we'll talk about Larsen and Toubro and Tata Motors and all of those stocks as well. On first words, I haven't dwelled too much on them. They'll be coming up in just moments from now. In fact, let's tell you what's lined up on first word today. Darshan joins in first to take us to the performance in the second quarter for L&T and what's prompting the company to be so bullish for the rest of the year. No such luck for Vedanta though, which has in fact cut demand guidance for some of its products. Nikki takes us through the details. Festivities may have started a bit too late for car makers in October. Yatin Mota tells us why. And a surprise in these numbers, will that prompt Nagnath, S. Nagnath of Franklin Templeton to step in? We get you a slice from my conversation with him on what else is he betting on. And last but not the least, while India's jump in the World Bank ease of doing business rankings is commendable, some places which we still need to improve in, I'll just dwell a little bit on that. Start off with L&T though. The earnings beat even the most optimistic estimate in the second quarter. Darshan Mata is standing by to tell us what helped the numbers for the 11th straight quarter. More importantly, did he spot anything in the guidance from the management?
Yeah, so the guidance has been maintained. That's positive, and in all case, with the numbers that have come in the first half, it is set to beat the guidance that it had. Now the top line growth has been 20%. The street was anticipating, and our estimates was 10%. So that's a big boost up there. Profit is up 22% at 2,200 crores. We were estimating almost 1,650 crores. So that's another positive. And this had an exceptional gain of 295 crores. But remember, even if you exclude this, the numbers are still better. EBITDA also a growth of almost 27%. We were anticipating anywhere between close to 15%. So operationally, they've done well. 11.7% is the margins that they have come out with. Basically, the other factor was the order inflow also. The street was anticipating, close to anywhere between 30 to 40,000 crores. The higher end was 40,000 crores. They have done close to 42,000 crores of order inflow. All segments, infra, hydrocarbon, heavy engineering, power, from all these segments, there have been, orders that have come in. So that's good. The consolidated order book is also rather strong for them. As far as individual segments are concerned, 22% growth on the infra side, but margins took a little bit of hit there. Power saw improved margins that came in. Heavy engineering saw growth that came in. Defense saw margin improvement. Electrical automation saw margin improvement and growth that came in. So across the board, there was traction. Margins and order book, both of them being maintained, should bode well for L&T. Most of the brokerages have given this the thumbs up. They've said that it will be easily achievable. So expect the company to react positively to the numbers today.
Interesting. Darshan, no anomalies that you spotted.
Not as much. Everything was stable, but came in higher than what we were anticipating.
Okay.
The balance sheet was strong. The balance sheet, the working capital days was strong. Everything on that front was strong. So overall, I don't think there was any major room to complain for L&T this time.
Okay, maybe for the space at large, and something that we'll talk about tomorrow as well.
Neeraj, what has historically happened for the last at least 3-4 years is that either on the second quarter or third quarter, invariably L&T cuts guidance. This time around, that's not happened. If that's the anomaly that you're looking at, yeah, that's the positive anomaly.
Well, yeah, I mean, anomalies can be positive or negative, and clearly brokerages also like what they've done. Darshan, of course, giving us a synopsis. Darshan, thanks for putting that into perspective. So that's Larsen and Toubro for you if you're wanting to know what's happened to the counter or what's happened to the business in the quarter gone by. There you have it. Could react positively. Let's wait and watch. Will there be any such luck for Vedanta, though? The mining giant also came out with its numbers and failed to meet estimates after its zinc and aluminum businesses saw a drop in operating profits. Nikki Mirchandani is here to take us through the numbers. Nikki, good morning. And you know, Hindustan Zinc as well cracked quite strongly in trade yesterday, but that notwithstanding, how did Vedanta's numbers stack up? What are brokerages saying?
Extremely disappointing set of numbers. Not just numbers, even the guidance itself is very disappointing. I'm going to start off with the basic numbers, where revenue is up by 5% for the company at a number of 22,705 crore. This is in line or probably better than what we were estimating, with reported net profit has come down by 34% at 1,343 crore. Now this includes the exceptional gain. If you adjust for that, the numbers have been way lower than what we otherwise were estimating. EBITDA is down by 8% and margins are at 23% as compared to 26%, a contraction there. Exceptional gain to the tune of 320 crore. This relates to the arbitration reversal and some reversal in oil and gas business. What goes behind the making of the numbers, as Neeraj highlighted, we've seen EBITDA drag coming in on account of decline in Zinc India and aluminium business, higher finance cost, more depreciation along with lower other income has weighed down on the operational performance of the company. Look up the chart there at the EBITDA segmental breakup. That's probably the key highlight that will help you understand how the business have performed. Zinc India down by 26% year on year, international down by 96%, aluminium business has seen a 13% downtick there. The only saving grace, as you can see in the chart here, is the oil and gas business, which is up as much as 72% year-on-year basis for the company. Copper division, steel division still have put up a brave front. What is positive in this development is a declaration of dividend of rupees 17 per share, which is almost 8% of the current market price. Definitely a positive and augurs well for the market. Con call, in terms of the guidance that has been provided by the company, oil and gas division, we've seen a volume cut there to the tune of 10 to 20% in FY19. Now this is the key contributor towards the EBITDA, and that volume guidance coming down definitely doesn't augur well for Vedanta. Zinc international business, we've also seen a guidance coming down. Copper, notably, it has not reported any EBITDA loss, in fact a profit. They've also outlined the capex plan for Alumina Lanjigar refinery. They're going to be start paying off in 18 to 24 months, and also they've spoken a little bit about the steel. Importantly, in the con call, they've spoken about the aluminium business cost of production to remain high. Brokerages have not taken much out of it. In fact, it's a negative development. JP Morgan has maintained the kind of rating and the target price, but they expect the H2 to be better than the H1, obviously because of the seasonality impact. Macquarie has pretty much cut the target price to 254 and has said that the higher cost guidance for aluminium combined with the lower volume guidance for oil and gas segment is expected to keep the earnings under pressure.
So our brokerage is saying that the stock could start off slightly negatively today?
Yeah, we're estimating the stock to start off negatively, but then we also need to bear in mind the fact that there are two positives coming out of the development. One is the dividend, which has come through, and also the net debt, which is reduced to an extent. So these are two positives that we also need to keep in mind.
Okay, we'll probably talk to our market experts who come in later on to try and figure out what to do with Vedanta, an important stock for the session. Nikki, thanks for putting that into perspective. Not the best of numbers for Vedanta, and maybe such luck also for automakers. They would have hoped to make the most of the festive season in October, when car and bike sales typically pick up pace. But the Bloomberg Quint poll conducted amongst 3 brokerage houses show that it might not be the case for car makers, at least. Yatin Mota is here to tell us what could be in store for automakers. Yatin, morning, and not the best of October.
Yeah, and not the best of October, and a very slow start to the festive season, if I may put it that way. Remember we had Hero Moto and TVS Motors say in the conference call that the festive season started slow. In fact, Maruti also said the similar thing that higher fuel prices and higher commodity costs are clearly impacting the customer sentiment at this point in time. But barring the two-wheeler and four-wheeler space, and I'm talking about the commercial vehicle segment, we will have a good growth coming in. Let's talk about the estimates and as to how really is the thing shaping up. And Maruti Suzuki, is one thing that we'll be watching out for. We are expecting a 5% kind of a growth as far as Maruti is concerned. Mahindra and Mahindra automotive segment on the back of Marazzo launch, as well as some pickup in the rural markets, we could see a 5% growth coming in on a year-on-year basis. Apart from that, in the two-wheeler space, of course, we'll talk about the commercial vehicle segment first. We have Ashok Leyland, Tata Motors, and M&M tractor segment. All of that would show a strong growth. In fact, for Ashok Leyland, the markets have been picking up good infrastructure spending, as well as overall, pickup in the economy augurs well for companies like Ashok Leyland and Tata Motors for the commercial vehicle business. Tata Motors, on the other hand, also would see some good growth in the commercial vehicle segment. Apart from that, we have the two-wheeler segment, which could, do well. So we'll have the likes of Bajaj Auto on the back of good growth in the, commercial vehicle three-wheeler business. Also, the export markets, we could see almost a 24% kind of a growth. TVS Motors also on the back of new launches and scooter segment and motorcycle sales growth, we could see almost, 23% kind of a growth. Hero MotoCorp, as they were mentioning, the basis of last year is quite high. Plus the festive season is slow, so only a 13% growth seen there. Royal Enfield could see a decline in the overall sales volume. Two reasons. Number one is a general slowdown in demand. And number two, the most important point, the production loss at Chennai because of the kind of, labor strike that we saw. So because of the labor strike, we could see Royal Enfield volumes surprise on the negative side. That's all about it. Broadly, a good month. But not great because of the slowness in the festive season.
Okay, we'll wait and watch for some of these names, and you have those numbers. And frankly, if you want to know more about this, I presume a copy or a story around this numbers could also be there on the website. So do log on to bloombergquint.com and try and get a sense of what the numbers could look like. Of course, once all the numbers come out, we'll have a detailed review of how the month has gone by as well. Yatin, thanks for putting all of this into perspective. That's autos for you. In tradition with getting you some of the most important voices, S. Nagnath of Franklin Templeton is the next one. He's hoping to see a positive surprise on the festive season sales. He expects this revival in auto sales to be one of the key factors in helping the Nifty head back towards the 11,000 mark. Here are a small slice of the conversation that I had with him on our special series, Navigating Through Uncertainty.
Short covering is one, because the decline also happened over a 2-month period, right?
Within the ones which are beaten on the most, or how do you think it works?
Well, I think, financials, is a sector that got hurt quite a bit. So, they have rallied today. I think they'll continue to do so. Autos, if the festive season numbers actually eventually surprise, you could see an uptick there again, initially led by short covering and then by follow-through buying. Metals, another space that hasn't done that well. The energy sector. So there are enough and more sectors that have not had a great run in the last 2 months. So all of them, I think, will start showing, some uptick. And then you could, once, like I said, these trade issues and other, you have some degree of appreciation in the currency because of lower oil prices. And people say, oh, okay, the oil prices went up, but now they seem to be settling down and not moving this way or that way in any volatile fashion. Then the beneficial impact of that will, show up in the appreciation of the currency. That will in turn trigger some, foreign inflows as opposed to the outflows we saw in the last month or two. So you'll have a series of, I think, potentially positive factors that contribute to the sustenance of this uptick beyond the initial round of short covering. And then, maybe once we get back to 10,800 or 11,000 or maybe 11,200, then there could be a reevaluation at that point based on the earnings for the December quarter. And then the state of all these factors I alluded to earlier in the international context. And if the view is that, nothing much has changed, maybe then you have a sort of a range-bound market for a period. On the other hand, if those issues again come back to the fore, you could have another round of correction.
In that sense, the markets and the Fed are in the same boat, data dependent.
Well, I mean, pretty much every investor is also now, in that same boat. We have to look at the data on a more continuous basis than before. Because many trends have, been interrupted.
If you are deploying money right now because you're finding value in certain pockets, are you even looking at the smaller end, or are you keeping yourself largely restricted to the largest top 100, 150, say 200 names?
We are limiting our focus to the large cap companies because that's where the liquidity is.
Okay.
Yeah. So, again, we take short-term trading views. So what you need is liquidity.
Liquidity.
Yeah. So we would rather like to focus on those stocks where there is ample liquidity, and that is in the large cap segment.
And you can catch this entire conversation live, or rather at 10:30 a.m. only on Bloomberg Quint Live. Okay, the last piece on First Word, and something that might give more ammo, more fuel to the bulls, or to the positive sentiment, if not the bulls. India has jumped 23 places on the World Bank's ease of doing business rankings. Now, as a result of this, India is now the top ranked country in South Asia on the ease of doing business parameters. Well, that's quite something. The number is 77. That's a 23-point jump. Top ranked country in South Asia, and it's amongst the top 10 improvers for a second consecutive year. That also augurs well. Now, the government has been talking about trying to, ease the hurdles for doing business, and while on a lot of parameters that's been scoffed at as well, the fact remains that the World Bank believes that there is some improvement out there. Now, what's worked? There are certain parameters that have worked and certain parameters that we still lag behind in a meaningful way. Let me first try and tell you what worked. So construction permits and trade across borders, but construction permits predominantly. Big gain in that number. India climbed 129 ranks to climb to the number 52. I think all the news bits that came out seem to suggest that the removing hurdles and targeted government efforts to remove these hurdles have helped this particular parameter. So this plus the trade across borders, the two parameters which really led to us to well on the ease of doing business. DIPP, of course, came out with its own, everyone came out with its own statement. I think Finance Minister Arun Jaitley also addressed the media, but DIPP mentioned that India now ranks in top 25 on 3 indicators: getting electricity, getting credit, and protecting minority investors. The small catch though, and that's where I think some work that needs to be done. And again, the story is there on the Bloomberg Quint website too. You can go in and see this. We're calling it the job half done, and that's because of 2 reasons. First, India's ranking in registering property fell to 166 from 92. So that was a bit of a disappointment. And while we may be in the top 25 on protecting minority investors, the rank fell on that parameter, both on the parameters of protecting minority investors and paying taxes. Well, shouldn't be surprised really if you look around. But yeah, so there will always be these issues that we have to clean up on almost all counts. But the headline number is impressive, that we are up 23 points. We are up for the second consecutive year. We are now at the 77th rank. And we are actually the top ranked country in South Asia on the ease of doing business parameters. So there's some solace to take from there. And as I said, the story is there on the website as well. So do log on to bloombergquint.com and read up more on this. It's a feel-good factor for sure. However, that brings us to the end of First Word for the day. But there's lots more lined up on Indian Open. We decode the September quarter earnings with PS Jayakumar of Bank of Baroda and Ravi Jhunjhunwala of HEG post 9:30, and have a special conversation with Sandeep Bhatia of Macquarie just around market open. But all of that's coming later on. After this break, we take a full tilt towards the day's trade.
Good news, got a promotion and a damn good raise.
Congrats बेटा।
वाह, रेज अब तो इंश्योरेंस पॉलिसी ले ले।
कौन सी कंपनी से लूं?
चूज वही जिस पर हो पूरा भरोसा।
That's good, but आज की जनरेशन wants everything online. Easy premium payment options, loan facilities और wide range of products.
पापा दीदी, I will decide. Just send your links now. तुम दोनों भी ना, same choice. LIC.
LIC, trending with times. 62 सालों से हर जनरेशन की पसंद।
This is a show which gets you a complete wrap of all the stocks that are buzzing in trade.
Everyone's a price taker, not a price maker out here.
There are better opportunities in the marketplace.
The return ratios will improve, margins will improve. What are you seeing? Valuations are extremely expensive.
It would take 100 years of profits to really pay off the entire debt.
Not all good businesses are good investments.
Good return on equity could be expected.
And I think that is sustained.
Their numbers, etc., were pretty sluggish.
How much longer they can sustain, I'm not too sure.
It has never been the scenario in any of the stocks.
It's an avoid for him at this point of time.
I wouldn't write it off in such a hurry.
We're getting into more complex chemistry.
Join me as I navigate the hottest stocks and help you pick the right stock at the right time.
Welcome back to all our viewers. You're watching Indian Open right here on Bloomberg Quint. Let's quickly hop across to Asia to see how we are shaping up for trade in light of what the US has done in the last two trading sessions of this month, which is probably the worst month in 6 years that they've seen. So mixed bag move on Asia. Nikkei is down about 0.75%, Shanghai trading in the green, and Hang Seng a handsome 1.3%. Taking across the US, Nasdaq, Dow, S&P 500, just to take a quick glance at how they shut shop for trade. So sea of green across the board. For us as well on SGX Nifty, currently at this juncture at least, we're trading with gains of about 1/3%. Whether or not we can retain these gains or you start to come off is something we'll have to wait and watch. 10,419 on the SGX Nifty. Derivative market is looking fairly active. Yesterday's session saw a lot of activity, at least in the last few hours of trade, as we propelled ourselves towards the 10,400 mark. We've got Darshan joining in right now to talk a little bit more about what the key highlights that happened yesterday. Darshan, good morning.
Yeah, so it was almost a 300-point move on the Nifty from the bottom, because remember at one point of time the Nifty was trading down by 100 points. But if you see it, fresh buying was seen on the Nifty. Open interest build up of 5% on the long side. Even if you're looking at the Nifty Bank, again open interest build up of 2%, that too on the long side. And remember, the SGX Nifty is indicating that probably we might come in close or open above the 10,400 mark in trade. So that is where traction will happen. Now, if you're seeing at where positions are taken, 10,200 is the first support, and 10,000 is the biggest support that the Nifty has at this point of time. Quite a few times we've come very close to breaching the 10,000 level, but it hasn't happened. The Nifty has managed to bounce back. Now clearly with the SGX Nifty indicating the futures will be around somewhere around this level, between the 10,300 and 10,400. So what will happen is that put writers will become much more active. These red lines here, they will go up, and these green lines will come down. Now if you see what happened in trade yesterday, pull up the chart. They say so exactly a similar chart. If the Nifty manages to hold on, the put writers will become much more aggressive. They will write in because the premiums will fall down and they will make money, and call writers will have to forced to be shut positions because of rising premiums. So that's the trend that we can expect in trade today if Nifty manages to stay in the positive side. There are no stocks in the F&O band, but nevertheless look at the Nifty Bank. PCR has managed to actually move from 0.90 to almost 1.27. A couple of stocks that we need to highlight, and they will be basically the open interest gainers and decliner. Coal India yesterday had reasons of its own. The OFS is on, the counter was down 2%. Look at the fresh buying that came in Cummins India. Very strong numbers, very strong commentary. Open interest build up of 46% on the long side. CSE has been under pressure since now it's only the power business that's trading. Is gone ex the retail and the BPO business. Syndicate Bank, now look at this. Open interest build up was 15% and the counter was down almost 0.6%. The numbers came out after market hours, extremely weak set of numbers. So probably there will be more short positions that will come in. And like the rest of the PSU banks, Allahabad Bank did manage to move out. But lots of short covering was seen in certain counters, especially the NBFC. So Dewan Housing and Piramal Enterprises saw short covering. BPCL saw short covering post the numbers that came out. Muthoot Finance and Kaveri Seeds were the other counters that managed to move up due to short covering that came in yesterday.
Got that. Darshan, thanks a lot for that. So those are a few stocks you need to watch. For Cummins India, for one, 2 or 3 straight days of gains on the stock, and the build-up has been equally good. In the last 1 month, the stocks moved up closer to 11%, but it was the last 2 or 3 days that actually led it to make a sharper move. But before we'll talk about all of that and more, we've got Rusmik, Senior Vice President and Head of Fundamental Research at Kotak Securities. He's joining us on the show right now. Rusmik, thanks very much for taking time, and good morning to you. The bulls seem to be putting up a really brave fight over these last few days. Do you see the scenario changing materially over what we've been seeing in the last 1 or 2 months? So this is probably just, them trying to claw their way back before them getting squashed once again by the bears.
Good morning. I think markets were quite oversold, so there was a pullback, which was desired at around 10,000, which has happened in the markets. And if you see the way the initial last 10,000 for 1,000 points, which fell from 11,700 to 10,700, it was mainly on account of 2 factors going negative: crude going up and currency depreciating. Now, since both these factors are receding and are turning positive, markets are also pulling back. At the same time, earnings have been quite coming as per expectation. There has not been much disappointment in numbers. So all this put together is leading to some bit of short covering, and since the market was quite oversold, it's pulling back. Our estimate is that markets probably can go up to around 10,700, 800. One needs to reassess at those levels whether a market has further legs to go up and cross the 200 moving average, or from there it can retrace. But right now, I think we have a range that is between 10,000 to 10,800. It's a little wider range which you go at because volatility is high. And there are events going forward because volatility is VIX and vol are very high because we have next month election results also. So as of now, we feel that market is in a good shape for a pullback to around 10,700 to 10,800 levels.
All right, that's on the index. Rusmik, L&T, spotless set of numbers, beat the street on most of the counts, in fact all the counts, revenues, margins, you have the earnings, the order inflow. So they've not really changed the guidance much, the order inflow guidance, but overall a really strong set of numbers. Do you see this stock being a bellwether stock within the Nifty?
Yes. I think though the order intake has not changed much, but the margin improvement is quite visible. At the same time, what we're seeing is most of the smaller players in the engineering infrastructure may not be able to take up a larger project, so that gives a lot of comfort that L&T will be in a better position to grab a bigger chunk of larger orders, especially given the liquidity crunch which is there in the system. And this is the continuous improvement we are seeing in every quarter in L&T. And the buyback also indicates that the company is also quite confident about doing good numbers going forward. As a house, we were quite positive in L&T. We feel that the stock has an upside to around 1,500 to 1,600 levels. And because of the buyback, we feel that the downside could also be protected in the stock. But in this environment, the kind of numbers L&T is displayed, quite encouraging, and the street should cheer the results.
Interesting. Would you guys be, Rusmik, good morning, Neeraj here. Thanks so much for joining in. Were you, or has a team been disappointed with how Vedanta came out with the numbers and the commentary around it?
No, I think we were expecting that 33% fall in earnings because of the headwinds they were having in their copper business and the iron ore business. And zinc also, Hindustan Zinc results had indicated that numbers will be on the lower side. But I think so, as far as Vedanta stock is concerned, we are quite comfortable with the valuations of the stock. Very undemanding, plus the dividend yield could be very high in the stock going forward. And I think there could be a relief from crude because if you look at Vedanta, around 85% of its EBITDA comes from 3 businesses, that is zinc, aluminum and crude. Out of that, aluminum cycle is still quite good enough. Copper, they have their issues with the smelter, Tuticorin smelter being shut over there. Zinc, I think so, volume growth will come up going forward because they're expanding capacity in India. and the South Africa mines will also probably start. So going ahead, we are looking at volume growth in zinc, a decent EBITDA and decent volume growth in aluminum, and crude could surprise on the higher side because with the lag effect, we will see the impact of higher realizations in crude and the profitability going forward. So net cheap valuations, high dividend deal gives us a lot of comfort in Vedanta. The risk reward ratio at current level looks very good, and our house, we still have a target which is probably about 300.
Okay. Rusmik, we were just looking at the key developments. I think the one that stood out for me personally yesterday was PNB Housing Finance managing to raise a large sum. And when we spoke to them, they said that the coupon on the commercial paper was about 8.25. Now, I think yesterday all housing finance companies, by and large, were doing very well. Does this give an indication that the liquidity situation is not as stressful as what the market would have wanted to believe? And is that a bit of a near-term trigger for the NBFCs?
In NBFC, anyways, the main key concern area is for housing finance companies only because of the ALM mismatch. I think larger corporates, like PNB, LIC Housing Finance, HDFC, they should not have any issue of refinancing their short-term borrowings by way of CPs. I think this November we have almost around 1,50,000 crores of CPs which are coming for refinancing. The amount is quite large. In that context, what PNB has raised is quite a small amount, but still we are not out of the woods. We'll have to still keep a watch on going forward how the other players are also able to either raise money or refinance their short-term borrowings, because still the mutual fund industry is little risk averse, and at the same time the banks, I think except for SBI, other PSU banks may not have that big ability to lend big time to NBFCs, because if you look at the overall, anyways, NBFCs as a percentage of bank lending is almost reached around 20%. So going forward, it is still we're not out of the woods, I suppose, and probably by mid of November we'll get a more clarity of how companies are able to refinance their short-term borrowings. Larger companies, maybe they could be able to raise money at a decent coupon, but we could have some issues with smaller names. They might have to end up refinancing at a little higher cost. Given that both RBI and the government are on top of the subject, and they understand the grave and the concern with the liquidity crunch in the system, it will be more from the government side and from the RBI side what measures they take to ease the liquidity issue. That will be more determining the course of action in the next 15 days to 20 days. But given the large chunk of refinancing which is still due, I think it's initial days. We'll have to just wait out till mid of November and then take a call whether most of the companies are able to ride through and are able to refinance at reasonable rates.
Okay. So many other results to talk about as well, and let's Rusmik, just stay on. We'll just first get in our research team members in our research huddle to talk about the other results that came out post-market hours yesterday, some stocks in news for today's session as well. But frankly, I think a lot's got to do with the numbers that came out. So Nikki, Yatin, Yash, as well as Agam join in to speak about these. So I'll start off with Agam, and let's talk about United Spirits, right? Because it seemed like a blockbuster set of numbers.
Yes, absolutely. It was a very, very strong quarter, considering a 16% rise in its revenues. We've seen margins expand quite substantially. In fact, margins have now gone up by about 21%. And the expansion is, of course, on the back of several other reasons, which I will come to in just a bit. And profits, of course, consequently have risen too. Now, we have seen a considerable rise in its prestige and above segment, but we've also seen a rise of 8% in its popular segment, which had been lagging for the previous few quarters. Moreover, there's a 150 basis points expansion in gross margins, which is why we have seen margins on the whole expand so much. And the management suggests in its press release that because of the fact that the staff costs have been curtailed to a certain extent is also another reason behind the leg up in that considerable expansion in margins, consequently impacting this considerable growth in profits too. So on the whole, it's a beat on your top line, your bottom line, as well as your margins when it comes to United Spirits, and we're certainly expecting a positive uptick, at least with respect to opening going today.
Well, let's wait and watch what happens there. Thanks a lot for that, Agam. No such luck for Tata Motors, I presume, Yatin.
Yeah, Neeraj, on the operating front, of course, it was slightly better than the expectations, but clearly no respite coming in. Foreign exchange losses, slowdown in sales has clearly impacted Tata Motors' consolidated performance. Now, if you look at the revenues, they came in at a little over 72,000 crores, a growth of nearly 3%. EBITDA, however, saw a decline of nearly 16%. Tata Motors consolidated basis reported a loss of nearly 1,050 crores versus a profit of nearly 2,480 crores last time around. Margins also compressed to a level of 9.4% versus a level of 11.5%. Of course, the key factor here was JLR, wherein the margins came in at 9.1% as per the management release versus a level of 11.8%, and they reported a loss of nearly 100 million British pounds versus a level of 253 million British pounds, which was profit last time. Revenues were down 11%, and the management blames slowdown in the Chinese sales as well as the US market slowdown impacting the overall performance. Standalone margins also came in below estimates at 8.7% versus the expectation of 10%. And of course, the management importantly indicating that the Slovakia production has already started. They have curtailed the planned spending for FY19 and FY20 by 500 million British pounds. So a capex cut coming in from Tata Motors, and the consolidated automotive debt for Tata Motors as on 30th September stood at a whopping 41,151 crores. So on the balance sheet front, clearly slightly stress that we are looking at, but a capex cut coming in probably would mean that they will have better cash flows in the coming quarters.
Well, interesting. We spoke about the possibility of this capex cut yesterday when Yatin was doing the preview as well. Thanks, Yatin, for that. Nikki, what about the other results?
I'm going to start off with HEG. Great set of numbers reported by the company. Revenue, we're looking at a more than fourfold jump at 1,793 crore. If you look at the net profit of the company, that's almost risen 8 times. EBITDA has seen a 7-fold jump too. Margins have expanded to 76% as compared to 46%. Importantly, however, the interim dividend stood at around 30 rupees per share. So it looks like the street could be a little disappointed. We spoke to the management. They said that the dividend payout is expected to be maintain around the same level, but then they also guided about the margins being at the same level. We're going to catch up with the interview with the management in a bit now. A second number that we're tracking, Canara Bank. Good numbers reported by the company. Asset quality has improved. NII up by 17%, net profit up by 15%, and if you look at the asset quality, that has improved. GNPA has come down at 10.5% as compared to 11.5%. Syndicate Bank, not that great set of numbers. NII down by 4%, net loss as compared to net profit on account of lower other income, and the asset quality has deteriorated sequentially. 12.9 compares to 12.5 sequentially. Castrol India, again, a poor set of numbers reported by the company. Revenue up by 7.6%. Net profit has seen a decline on 15%. That's on account of operational performance, which is down by 10%, mainly on account of the higher raw material cost that has weighed down on the operational performance of the company.
Yeah, margins have just collapsed. Let's wait and watch what happens to Castrol in the session today. Yeah, Nikki, thanks for putting that into perspective. Yash, quickly, a set of stocks in news.
Yeah, I'll start with IndianOpen Bank. There, the company has clarified that they have an exposure of about 3,025 crore rupees to Island FS Group, which is 1.8% of their Q2 loan book. Vatek Wabha, that one has received a 1,000 crore rupees order for engineering, design and build contracts towards the expansion of a sewage treatment project in the Middle East. KEI Industries, apart from its numbers, has also announced that it would be expanding its capacity by about 3 lakh kilometers per annum for a total investment of about 55 to 60 crore rupees. The said project is expected to get in revenues to the tune of 300 crores on an annualized basis. Adani Enterprises, that one is also in focus as it reconsiders its mine plan for its Carmichael coal project in Queensland to allow production with a much better initial capital investment. Bosch, there the company is, the board of directors are likely to meet on November 5th to consider a share buyback plan. So there we could see some positive, as well as the auto stocks, which would be in focus as the companies announce their October sales numbers during the day.
Okay, we'll watch out for all of these. Yash, thanks for putting these into perspective. Well, somehow I can't get over earnings season. Rusmik, excuse me for that, but I think 2 or 3 numbers that stood out from me from out of this list. Do you guys have coverage on United Spirits? And if so, what did you make of those numbers?
Yeah, we do have coverage in United Spirits, and the numbers have been quite encouraging because last year most of the liquor companies had gone through a bad phase because of the highway ban on liquor sales, and after that, it's taken a lot of pain for the industry to come back. Because of the lower base of last year, and because of the consumption again resuming back to normalcy. We're seeing a lot of efforts put in by the management also. They have been talking in the con calls of raising the share of prestige brands, which they are now trying to deliver, and which is quite encouraging. Overall, on the entire liquor consumption space, we are quite positive, and we feel that there could be further upsides in United Spirits going forward also. And because we are heading for a busy season also, and then we'll have elections in mid of next year also. So I think maybe next couple of quarters we could see encouraging results from United Spirits, and that gives a little feel that the stock should deliver going forward in the next 2 to 3 quarters.
Okay. Stay with us, Rusmik. Let's bring in our technical analysts as well at this point. Sameet Chavan, Chief Analyst for Technical and Derivatives at Angel Broking. He's joining us on the show shortly. Aditya Agarwala will also be here with us. Sameet, how is the technical setup looking? Are there any major changes in terms of the signals that you're getting post the recovery that we've seen towards 10,400?
See, no major changes as such, but yes, short-term reversal is on cards, and this is what we have been witnessing since last 3 days. In fact, last week also we saw Nifty correcting from its support levels, but despite this, there was no major follow-through selling. So it was an indication that the sellers have exhausted a bit. So we waited for a reversal, and that the reversal we saw on Monday when Nifty surpassed Friday's high, that was around 10,129. So that triggered some kind of relief move in our market. Yesterday in the initial hour, we did see a good correction toward 10,100, but in this price activity, as far as option data is concerned, we did see massive open interest build up in 10,200, 10,300, 10,400 call strikes. But when we saw a U-turn from its important support levels, and when Nifty surpassed 10,300 in the latter half, we did see a good unwinding in all those strike prices. In fact, 10,300 and 400 puts added a good built up. So that's an indication that at least for a time being, the selling pressure has arrested, and from here on we are gearing up for strong relief move. So we expect Nifty to immediately head toward 10,520, 10,550, but eventually 10,700 cannot be ruled out. So our strategy, at least for a week or so, would be buy on dips, wherein one can go long in Nifty around 10,350, 10,280, keep a stop loss, so that makes a good risk to reward ratio. And on the higher side, immediately we expect Nifty to head toward 10,520, 10,550.
What about your stock ideas? I see you got a buy on M&M Finance and then buy on Century Textiles.
Yes, clearly yesterday we did see, good bump up in most of the NBFC stocks, which have hammered down in the recent past. So M&M Finance is the one stock that has been consolidating, and yesterday there was a decisive breakout from its previous hurdles. And if you look at the volume activity in cash segment, it has picked up. So we expect continuation of this move. Immediate target to watch out for would be around 432, stop loss at 396. And overall, in last 3 days, the entire mid-cap basket has been clearly outperforming. If we look at the mid-cap, Nifty mid-cap 50 index, it has already confirmed a high top high bottom formation. So it's an indication that mid-cap stocks are likely to outperform, and they are likely to give decent relief moves. So Century Textiles, on daily, weekly chart, we are seeing some kind of double bottom kind of formation. And yesterday we did see the stock surpassing its hurdle. So we expect Century to move towards 878. It can be bought with a stop loss of 798.
Okay. Stay on with us, Sameet and Rusmik. We'll just come to you shortly, but it's time now to go on to a special segment, Bloomberg Edge, where Yash Upadhyay tells us about a pattern that the Bloomberg terminal has shown up on a particular stock or a trend that he's picked up. Yash, good morning. What's the stock on your radar today?
Good morning, Devina. The stock today is VIP Industries, and there the proprietary Bloomberg indicator, which is the trender indicator, that has suggested a buy signal. Let's first try and understand what the trender indicator is and how does it work. It uses basically true range, the average true range for its calculation, and it generates buy and sell signal, and it helps to manage the stop loss. How it does that? It's very easy to understand. basically when the trender indicator, which is the line that will come up on their charts, it turns from green to red, it indicates that it is a good time to go short, and when it turns from red to green, it indicates the right time to go long. Now, as you can see on the chart that should come up on your screen, the stock has been consolidating from the levels of 600 plus and it had fallen down to as low as 400. Now, that was the time when the trender indicator had turned red, and now following the move of yesterday, the stock has managed to close above the red line, and with that the indicator has flipped to green, indicating that there could be further upside in the stock. And by the way, all the 5 analysts tracking it on Bloomberg, they have a buy rating with a return potential of almost 32% from the current price of about 442 rupees.
Okay, and how well has this worked in the past? Yeah.
So every time the trender indicator turned from red to green and you went long on the call, on an average over the last 1 year, it would have given you returns in excess of about 10%.
Interesting. We'll watch out for this. Thanks a lot for that, Yash. Thanks for bringing that perspective. Okay, before we get back to Rusmik Oza, Aditya Agarwala, he's technical research analyst at Yes Securities, with us on the show as well for a quick technical perspective. Aditya, good morning. Thanks for joining in.
So much. Thank
How are you approaching trade today? Are you going long?
So yes, I'll go long in the markets. Nifty yesterday managed to close above that resistance of 10,320, and there was good volume seen in the markets yesterday. It was a broad-based buying generally. So overall structure looks, it has turned mildly bullish. So there can be more short covering rally seen. So I'll go long in the markets. My targets out here would be 10,440 to about 10,550. I'll keep a stop loss at 10,320. So Nifty looks like it's headed, and also it closed above the 20 DMA in trade yesterday. So that's a first indication that there is some bit of a buying that is seen in the markets, and markets started to make a higher high. So a couple of things suggest that there's more short covering rally in the offering in the markets. But just take a look at 10,440. That happens to be the gap area. So markets a couple of weeks back had opened with a gap down. So 10,440 happens to be the gap area. I would want market to close above 10,440 for any further leg up to 10,500 and beyond. Okay. But for the day, I'll still be bullish on the markets for first targets of 10,440.
10,440. We must start off this. SGX Nifty already indicating a third of a percent higher. 2 stock ideas, Aditya. What are your ideas for the morning?
Both buy ideas. One is in the pharma space. Aurobindo Pharma, it's been doing splendidly well. On the chart, it's broken out on good volumes in trade yesterday from a falling channel. And on the daily charts, the candle was a good sizable candle on good volumes. So I will go long in Aurobindo Pharma. Out here, targets will be 820, 840. I'll keep a stop loss at 770. The second buy idea is a Britannia Industries. That too stock post a correction and has taken support at moving averages and is bouncing off. Yesterday also it was up in trade. So I'll go long in Britannia. My targets out here will be 7590, 5790 and 5900. I'll keep a stop loss at 5560. So both long ideas.
Okay, 2 long ideas are not surprising in a session like this. Now, Rusmik, coming back to you, yesterday IT had this big bang move. Now, you know, a month and a half ago, valuations looked very, very stretched, and therefore, understandably, there was a bit of a pullback. Somehow, the last 2 or 3 sessions, Nifty IT has shown more up days and strong up days than down days. What's happening here? The numbers were just about in line with estimates. Why this sudden frenzy to get into IT yet again?
The way we are looking forward in IT is, if you look at the dollar index, it's again about the 97 mark, and probably it could go up to around 100 mark. The way we are looking at is this trade war could be a big element where we could see emerging market countries, currencies further depreciating, maybe start of the next calendar year. I'll just step back and give you a perspective. Is that we had $200 billion of Chinese imports. We've got 10% duty levied by US. And if the resolvement doesn't happen by end of this calendar year, then the duties on $200 billion goes up from 10% to 25%. So there will be an incremental impact of 15% import duty on $200 billion of goods moving from China to US. Now to counter that, the only immediate resolution which China could have is similar to what they did in the last couple of months, is that they would allow the yuan to further devalue against the dollar to cushion the impact of higher import costs in the US. And if that materializes, then what could happen? It could pressurize other emerging markets also to depreciate the currency. Another angle to look at it is the US bond yields are still about 3%, and if you plot the Fed dots, then they're going to go up only. So this unwinding of carry trade probably could continue, and along with that, with the trade war situation, if you take a little 6 months view, then after this recovery, we could see another round of currency depreciation in emerging markets, maybe start of the next calendar year. In IT companies, though the results have come in line, but normally we've seen that the currency impact comes with a little lag effect, because most of the companies have hedging policies. So immediately, if 1-2 quarters, they don't benefit. But I think if the currency remains around these levels, then maybe another quarter, post-December quarter, we will see further upgrades in FY20 numbers. And to that extent, as market rolls over and investors start looking at FY20 numbers from the next calendar year, January onwards, there could be a good case of further re-rating in case of IT companies. So combination of strengthening dollar index, a trade war, these are some of the reasons why probably people could look at IT. And anyways, the anticipation is that this move could be more technical or tactical recovery in the markets, may not be sustaining about 10,800. In that situation, again, for a margin of safety, maybe funds and investors can or probably would be looking at IT as a safe bet.
Aditya, does this technical bounce give you the heart to go ahead and enter into stocks with an Infosys giving you a jump of 4% in a day, Tech Mahindra 9% in the day?
So IT has been generally strong. There was a mild correction that was seen in the IT stocks, but in trade yesterday there was a sharp up move. Look at the way Tech Mahindra moved in trade yesterday. Probably it had seen one of the highest volumes it had seen. Tech Mahindra. So I would still be bullish in the IT space. Probably consolidation can be the order for the day in some stocks, because there was massive up move in these stocks. But overall, I'll still be bullish. Tech Mahindra, one can still go long in for a targets of 790 to about 850 if one has a time horizon of 5 to 6 months. So these levels, probably a minor dip to levels of 730 will compel me to get into Tech Mahindra again for targets of 790 to about 840, definitely.
Okay. One stock, Cummins India, and we were talking about that with Darshan, and excess amount of open interest build up around that stock, 11% higher. Last 7 days, this 13%, but the last 3 or 4 trading sessions, the stock is really piled up in terms of the push that it's got from the bottom. What's your sense here, Sameet? Is there a trade possible on Cummins India?
See, yesterday, there was a good bump up in this counter. Yes, volumes have risen, substantially. It appears that, the stock is heading towards at least its recent hurdle of 780, 785, but it would be a, challenging task for this particular counter to surpass this major resistance. So if that happens, then yes, it would unfold further leg of rally, probably towards 840, 845. So at this juncture, any minor dip, say towards 725, 720 would make it a good risk to reward ratio. So if one has to take any position, wait for a dip to happen around 720, 725, one can go long, keep a stop loss around 699. First target to watch out for would be around 775 to 785, and if the stock surpasses 785, then 820, 830 would be the next levels to watch out for.
Rusmik, this whole space, L&T's, the guidance, the numbers didn't look too bad. Cummins India, I'm not comparing apples and apples out here, but this whole spate of industrial stroke capital goods space, is it seeing a new lease of life of sorts? Do you guys have coverage? Do you guys like anything here?
So we like L&T because that gives a better proxy to the entire space, in the entire engineering space. Maybe Cummins, gets little benefit because of the export business there. Still the domestic demand environment is not so conducive, though we have seen overall capacity utilizations going up, and going forward, most probably I think there could still be time. Most corporates will be on the back foot right now. They have expansion plans, but they would like to probably wait out, and you will see much more concrete decision making on expansions and capex probably post the central elections somewhere in mid of next year. Anyways, there is more headroom for utilization levels to further go up, but on the engineering, pure engineering companies, demand we're not seeing that great revival as such. But a diversified company like L&T benefits a lot on across of its various businesses. So we are much comfortable playing out L&T rather than some of the other engineering companies, because there, it could be a gap stop. We'll see again volatility, and numbers may not be consistent going forward also.
The numbers which have been consistent has been HEG's. Revenue is up about 4.3 times, net profit 7.8 times, EBITDA up 7.2 times, and margins at 76%. I know a lot of talk about how this cycle will come to an end the next quarter, so on and so forth. But now we've been hearing that for the last 3 quarters at least, if not more, wherein there have been skeptics out there. But somehow the numbers have looked okay, and the managements have been sounding very confident about at least the next 2 quarters, if not longer. So the proof of the pudding is in the eating, and for now, HEG is delivering on numbers almost every single quarter. Good show. Let's see if the stock reacts today, but very strong quarter this time around as well.
And interesting that Bank of America Merrill Lynch target of 6,700 is still up for the taking. Whether or not this propels it a step closer to that, we'll have to wait and watch as to how the session today opens up. But a quick look at how we're set up for trade and pre-open. 10 seconds left to go for market pre-open. SGX Nifty trading, I wouldn't say firmly in the green, but 1/3% gains coming in there, but holding on to those early morning gains. 10,423. Asia's pack is a little bit mixed. That's the pre-open tick on your screens. Nifty 50, 10,452 is where it's trading at. So taking down the 10,400 mark. 34,845 on Sensex, up about 0.75%. Stocks then to watch out for. All of these prices are a little haywire at this point. They will start to consolidate in a bit. ONGC though is your top Nifty gainer right now with 10% gains. It's a bit thin right now, but you've got Ultratech Cement 2.5%. L&T numbers were strong. Stocks opening positive by 2.5%. You would have actually expected it to be slightly more, but probably the guidance not getting changed is something that's holding back. Yes Bank 2% higher, Hero MotoCorp 1.5% higher, Infosys, Kotak Mahindra Bank, and Indian Oil is up 1%. Tech Mahindra, after yesterday's stellar 9% move, is up about 1% today. And should also see what Indiabulls Housing Finance is doing, because that was the second best performer in yesterday's session. It's remaining unchanged. Amongst the bigger losers, Tata Motors, really disappointing quarter, at least in the GLR front. Stock down 10%. IndusInd Bank's down 2.5%. Lupin, Axis Bank, Eicher Motors. We're going to be focusing on all of these auto names to take a look at how the volume numbers are shaping up in the festive season.
You bet. The currency and the bond yields firstly should come up on your screen again and just see what's happening to the macro factors before we move any further. 73.85, so some bit of resilience that came in yesterday still staying put, at least on open. I think the government statements calmed some frayed nerves yesterday. The bond yield should come up on your screen as well, and let's see what we're doing there. Is it 8.8? 8.2 actually, closed at about 8.4 or 8.5, currently at 8.280 for the bond yield, 7.8 to 80. So that's what the bond yields are doing. IndusInd Bank is not reacting too much, by the way, to that piece of news. HEG, let's bring that up. Let's bring up Castrol. These are all result reactions and see what those stocks have done. Don't know if it'll be a 10% uptick or no, but looks like it'll start off well. So HEG looking like starting off very well. Castrol, well, not a great quarter. Stock looks like starting off weak. Jet Airways had a bit of a collapse in the last 15 minutes of trade yesterday. Might start off weak again today. ATF prices have been hiked as well. I don't know if SpiceJet and Interglobe Aviation too are following suit, but Jet Airways had issues of its own, remember. Now, I don't think the other aviation stocks are reacting, so Jet has got issues of its own right now with the lessors and the statements that came out, though it tried to put up a brave face yesterday.
Notices of delay of payment.
Yeah, but the notices of delay of payment clearly weighing in. Again, early days as yet, might change, but let's wait and watch. What else? Biocon, a bit of a correction, but not too much. What about the gainers? Bombay Dyeing continues on its merry ways, but please be very careful if you trade this one. Canara Bank, post numbers, up about 10%. Devina has been stuck on Edelweiss the last few days. That stock is up another 5% at 170. So good going for that stock as well.
Points.
Yeah, unfortunately not. But Edelweiss is doing rather well for itself too in the session today. But essentially, result reactions being seen for a clutch of the names. So United Spirits, have to mark that one. Somehow haven't done that till now. 1.6% higher, 586 and counting. Really good go for United Spirits in the session today as well. So good going for a lot of these names. Rusmik, just wondering, do you guys at Kotak have coverage on these graphite electrode makers, HEG and Graphite India?
No, we don't have coverage on that, but we have a view on the user industry at steel. As a team in the house, we were quite positive on the steel industry because the major business actually for HEG and graphite comes from there. And I think this year also China is more strict on the emission norms, and we'll see a larger number of steel companies coming under the hammer for pollution norms over there. And that's one of the reasons why we feel that steel as a commodity will retain and be firm as compared to other non-ferrous metals. So this bullishness on steel actually makes us feel, because the raw material costs have also shot up. Okay, iron ore cost, everything is also moved up. Maybe they might not sustain post February, March, but at least till the time we have winter, till January, February, we expect steel prices to remain firm. And because of which the scarcity of needle coke will be there, so these companies might continue doing well, and it's very difficult to bring in capacities of these products so fast in the market. So given these constraints, I think maybe yes, till the end of this fiscal year the companies might continue reporting very good numbers. Next year we'll have to wait and watch and see if fresh capacities are coming up in China, probably somewhere in the middle of next year, then that could be a little turning point. But as of now, I think they're in a very firm footing, and probably they could continue delivering good results going forward also.
All right. Since Neeraj said Edelweiss is my favorite stock, I'll probably just talk about that only. Aditya, I'll come to you. Obviously not at its highs of 320 that it hit, but the recent pullback from levels of 128 to about 170 has not given an entry point to any buyer post its numbers. Once the circuit opens, is it a buy for you?
So, see, it's a trade wherein right now the stock is just going into lower circuit and upper circuit. So for past few sessions, we've just seen upper circuits. As you pointed out, there's no buyer right now. Once the circuit opens, probably I can look at the stock purely because the stock has corrected significantly. But I'll place with a tight stop at 130. If the stock starts to trade below 130, I'll be out of the stock because there's huge volatility seen in the space.
It's 170 right now.
I know, but because of the volatility, 130, I have to keep a deep stop loss. I would be a deep one, and I would be looking at a target of in excess of 230, 250 also. Because of the pure volatility, because if I keep a stop loss of anywhere in the range of 5 to 10%, I'll be wiped out. I don't know, probably a lower circuit will wipe me out immediately. So if the moment the circuit opens, I will take a long probably with a stop loss at 130 and look at a target of 230, 250.
But the point being, Neeraj, is this just a technical bounce back because it started post its earnings and it was a really strong quarter for them, and prior to that, we've been talking about 21 straight quarters of profits coming in for Edelweiss. This was the 22nd straight quarter, adding on to the gains. So,
but I think if Rashesh's comments are to be believed, and we'll have a conversation with Rashesh coming up tomorrow as well, quarter 2 wouldn't have been a problem. Quarter 3, quarter 4 might be. So let's wait and watch. But maybe all of that is in the price. Let's wait and watch. Let's also wait and watch what some of the OMCs do, because if BPCL's numbers were an indication, the others too might follow suit. Well, HPCL is expected to report a muted quarter 2 on the back of the rising crude prices. Sameet Sarkar standing by with what one should watch out for. Sameet.
So if you see the headline numbers for HPCL now, they're expected to be weak. The revenue compared to last quarter is expected to be higher by nearly 8% to close to 72,845 crore rupees, while EBITDA now that is expected to be lower by nearly 13%. Margins are expected to contract to 3.8%, while net profit is expected to fall nearly 13% to close to 1,500 crore rupees. Now, gross refining margin that is expected to come in at around $5.58 per barrel versus $7.15 per barrel reported by the company in the last quarter due to lower inventory gains. Now, if you see, it is expected to be a muted quarter on the back of lower inventory gains and a weaker rupee. Now, inventory gains are expected to be lower because of a relatively lower hike in crude oil prices. Now, crude oil averaged around $75.89 per barrel. That was 1% higher compared to last quarter, and that's the reason why inventory gains are expected to be lower for HPCL in the second quarter. On the marketing side, if you see, fuel margins were steady for HPCL throughout the second quarter. The gross marketing margin earned by HPCL on sale of every liter of petrol, that averaged around 1.6 rupees per litre, while for diesel it averaged around 2.2 rupees per litre versus 1.9 rupees per litre reported by the company in the first quarter of financial year 2019. Now, on the operational side, if you see, the crude throughput, that is expected to be higher by nearly 4% to close to 4.7 million metric tons, while sales are expected to be down by nearly 3% to 9.4 million metric tons. Now, sales are expected to be down because of seasonal weakness weakness that we usually see in the second quarter of financial year 2019. Now, key things to watch out for from HPCL earnings would be the company's crude sourcing strategy amid the Iran embargo and a decline in Venezuela crude production. Along with that, the status of Visakhapatnam refinery expansion project would be a keen thing to watch out for, and the guidance on future capital expenditure would also be a keen thing to watch out for from HPCL's second quarter earnings.
We'll watch out for these. Thanks a lot. Okay, so numbers out on your screen. By the way, Escorts, the total tractor sales at 13,140 versus 10,205 units. So those numbers seem to be reasonably okay for themselves. Auto sales numbers, remember, start trickling in today onwards, and I thought the first one would be Maruti, but first off the block is Escorts. We'll have a chat with the management a bit later on as well on the quarterly numbers, but clearly the October sales numbers would also be something that we will talk to the management about. Rusmik, autos, sales numbers, the numbers that have come out thus far, anything that stands out for you?
We're expecting auto numbers to be very good in month of October. Actually, Maruti could also surprise on the higher side. It could be slightly optical also, because last year we had Diwali in October and this year it's in November. So, majority of the sales push for last year could have happened in September, and this year it could be in October. So, it will not be a clear apple-to-apple comparison. Maybe November, December could be the months to watch out for, because then you'll have a normalized base to look out for. But yes, we're expecting numbers to be better because of the lower base of last year of October. And there could be a pullback because most of the auto companies have been beaten down heavily. Escorts numbers, as you said, are very good in the backdrop of what tractor companies have been guiding. They have been saying that numbers may be a little muted in the second half, but with this kind of numbers, Escorts, I think it's very good.
Yeah, they certainly seem to be very good. It seems to have, it's actually a bit of a surprise, I believe, compared to what most people were working with. But let's wait and watch. And Bharat Madan would be best placed to really speak about this. Okay, minutes away from market open. Let's tell you all that you need to know to stay ahead in trade today. Then we'll get in final thoughts from Rusmik and Aditya Agarwala as well. Watch out for HPCL and HDFC as the two Nifty 50 companies will come out with their second quarter numbers today. Amongst others, Arvind, Berger Paints and DLF will also be reporting their numbers today.
From earnings that came out post-market hours yesterday, L&T, Adani Power, Canara Bank, HEG, United Spirits and Narayana Hrudayalaya posted a strong set of numbers.
However, it was a weak quarter for Vedanta, Castrol and Syndicate Bank. Meanwhile, Tata Motors and Sanofi India's results met street estimates.
IndianOpen Bank will be in focus today after it disclosed the details of its 3,025 crore exposure to IL&FS Group.
Customers vying for the Royal Enfield motorcycle may have to wait for a while longer. Labor issues at Eicher Motors' Chennai plant have led to a production loss of 25,000 motorcycles in September and October.
Lastly, ONGC has clarified that it has terminated its oil rig contract with Mercator. On 10th of October, ONGC is now working on alternative ways for completion of the balance work of the project.
Interesting. A bunch of names that you need to monitor in the session today. So the numbers that we spoke about, strong numbers. So HEG, United Spirits, we've spoken about them. Canara Bank, Adani Power, L&T, Narayana Hrudayalaya, all of these came out with a reasonably strong set of numbers. So do monitor each of these names. Rusmik, before we thank you, this correction and the opportunity that it would have given, anything that stands out from your team as a stock that people can invest money in?
There could be pullback, and as markets, the more slowly Nifty goes up from here till 10,700, the more broader participation can happen in the mid caps. We don't have a single out stock, but we like automobiles, and we like some of the NBFCs which have been beaten down because of the valuations over there. So these are two spaces where I think so, because risk reward ratio has turned favorable, and our suggestion to clients is still we would like to park a little higher allocation towards large caps than mid caps, because maybe markets may not sustain at higher levels, and again liquidity impact will be visible in mid caps. So it's better to stick with the larger names as of now rather than the mid caps. Mid caps could pull back, but maybe it will be interesting to see whether at 10,700, 800 investors are lapping up mid caps at those levels, or probably they're trying to reduce exposure over there.
Okay, Rusmik, we'll leave it at that. Thanks so much for taking the time out and being with us today, and festive greetings to you and your team at Kotak.
Yeah, thank you.
All right, that's Rusmik Oza. This thought. Sameet, Chavan, L&T looks like starting off with a bit of a bang. 3% higher, 1337. Would you have any thoughts here?
So this relief move started, 4 days back when the stock, consolidated around 1200 for nearly 3 weeks, and there was a breakout seen on intraday charts around 1220, and since then there has been no stopping for this counter. So we have already seen V-shaped recovery, and from here on it may continue a bit. The stock can head towards its recent swing high, that is 1370, 1380, but around 1380 you might see some kind of profit booking coming in.
All right. Let's talk about some top calls. 45 seconds left to go for market opening. Sameet, I'll stay with you. A quick 15-second call.
I'll stay with Century Textiles. Our target would be around 878. It can be bought with a stop loss of 798.
And Aditya?
I'll go in for a short call. A Dabur that's looking weak. It's broken down from a trendline support. I'll go in short in Dabur at levels of 385. Targets out here will be 375 and 370. Stop loss one can place at 392.
Okay, Aditya, we'll leave it at that. Thank you so much for taking the time out and being with us today. Sameet, Chavan, just stay on. We'll just take in an opening thought from you post-market open. But 0.5% higher for the Nifty and the pre-open session. Looks like we set for a good start. The question mark only is whether it'll sustain or no. And yeah, watch out for some of these auto sales numbers as well. Escorts and the data that has come out could well lead that stock higher. But here's how the markets are starting off. Very strong, about 0.5%. It's not bad, keep in mind, considering what the SGX Nifty was indicating at the start of the trading day. We're starting off exactly in line with that. The Nifty Bank about 1/3%. What about the mid caps and the small caps? Should come up on your screen. Well, about 1/3% for the mid cap index, about 0.5% for the small cap index. So not a bad start. The market seems to be positive. Let's get the heat map up on your screen and see what's moving and what's not. It's even Stevens, by the way, for the losers and the gainers, but not enough losers, save for Vedanta and IndianOpen Bank, which are the two newsmakers, collecting only 1%. Of course, the gainers don't have too much to say for Larsen and Toubro. I don't think we have too many big gainers, but L&T, strong show, 4.5% higher. Yes, Bank maybe marginally, HPCL maybe marginally, but those are few and far in between. So even Stevens for the companies on the index. Let's quickly get to stocks, the newsmakers, the market movers, and the result boys. So firstly, the large cap results that came out, the 2 or 3 names, let's just line them up for you and show you what they are doing. So Vedanta, L&T, Tata Motors, the only one which is actually making a meaningful move is L&T, now up 5% on the back of the numbers and positive commentary. What about stocks non-Nifty or non-index that have come out with numbers? So, well, United Spirits, that's arguably the stock of the morning to my mind, 5% higher for the large boy because the numbers just look quite exceptional. HEG, not surprising that it's up about 6%, and Castrol, the margin erosion not leading to a dramatic stock price erosion, just about 1% lower, not too much. What about stocks that were in news yesterday? Just bring them up before I hand it over to Devina. PNB Housing Finance, not really taking off from where it left off yesterday. Cummins, just about flattish too. So again, a bit of a muted reaction. But Jet Airways, which was down about 8 or 9% in trade yesterday, corrects another 1.5% in the session today. So yesterday's winners, not quite today's winners, but a lot of stocks which are reacting to results and news, Devina.
Most definitely. You highlighted Castrol, the other one being Canada Bank. Should see how that has opened up for trade this morning. Net profits were up 15.1%. Stocks down 1.5%. The other one was Sanofi India, Q3 calendar year 2018 numbers. Net profit was up marginal 2.5%. Stocks up closer to 1% in trade right now. We've already highlighted HEG. From the other banks, Syndicate Bank reported numbers. Net loss of 1,542 crores is what they clocked in. The stocks are down about 3% in the session. And we have the likes of Dixon Technologies as well reporting its Q2 numbers. Net profits dipped here closer to 21% for Dixon, and the stock's up closer to about 1.84%. Other gainers in the market right now, Bombay Dine is doing okay for itself. You've got a Vatek Wabag, there's an order win there, so that stock's doing okay, about closer to 5.5%. Kalpataru Power, you've got a Minda Corp, that's about 4% higher. Linde, Manappuram Finance, Escorts doing okay, 3% higher. Just saw those auto sales numbers. Dilip Bilkon and some of the other names like an HPCL and KEC International are doing okay as well.
Okay, Sameet Chavan still with us. Sameet, just a quick thought on open, 25 points higher. What would you be doing?
So as far as index goes, I'll still wait for a dip. I don't want to chase index now. If I had to chase index, the perfect opportunity was yesterday when Nifty was surpassing 10,250 in the latter half. So now if index gives a decline towards the 10,350, 360, that would be my buying opportunity. Otherwise, if I have a long position, I will stay long. But on the other side, I would stay long on. I would rather chase prices in individual stocks that are soaring, that are giving decent bounce back after recent hammering. So at this juncture, OMCs are clearly catching my eyes after crude softening a bit. It has slipped below 75. So BPCL certainly looks good. It is poised for a decent up move. So I believe that BPCL can head towards 290, 294 over the next few sessions.
Got that. We'll leave it at that, Sameet. Thanks very much for joining and appreciate you taking out the time. Time now for an important voice. Sandeep Bhatia, Managing Director and Head of India Equities, Commodities and Global Markets at Macquarie Capital, is joining us in the studio. So good to have you in the studio with us, Sandeep.
Thank you.
So my first question is obviously how have you read into the market mood over the last 2 months and what's been happening, and going forward by the end of the financial year, are there opportunities that cannot be ignored?
I'll just give a summary bullet point of what's happening. There are a couple of things happening within India, and there are a couple of things happening in the US. What's happening in the US is that Treasury bond yields are going to go up. They'll probably reach 4% in a year's time. We will see we have seen strong growth in the US. We have seen the weakening of growth in China. The consensus is that this year is going to be strong for the US, but maybe second half of next year, even the US growth will taper off. The trade war between US and China means that growth in China will remain under pressure. In the background, oil prices went up but seem to have now moderated. This is not generally bad news for India, except the fact that Fed rates are going up is bad for all emerging markets. Within India, two things are very important. One is that earnings growth is coming back after a long gap of 4 years. Indian bank balance sheets have taken a long time to get repaired. Indian capex story is still a train that we are waiting to arrive for. So that is the India side. But more importantly, finally, we can say with some confidence with the kind of corporate earnings which have been reported that earnings growth is coming back. The near-term uncertainty would be on the politics front. We'll see 2 sets of elections in November. Then we'll see the large national election come through in April. Once we are past that, I think the fundamentals of the Indian economy, which are much stronger than they were in 2014 or even in 2017, will come through in terms of indice performance. So I think earnings and stock performance should follow and should be strong in next year.
So far, obviously, the confidence of foreign investors has been a bit shaken from an Indian perspective. We've been seeing money moving out of markets so far. Do you see that return? I mean, since you've said that post the elections, considering where we are at and everything looks good, it should not be a problem, right?
I think the US bond yield is the major determinant of where emerging market flows are, and Indian flows are a fraction or a part of the emerging market flow story. So until we see consensus on where bond yields are headed and where they are peaking, I think foreign flows will remain muted to negative. And I don't think that should be a major cause for worry, because that's happening across the board, across all emerging markets.
So say 4%, at which what's your target? So
yeah, I've said 4% in the beginning of this conversation. I think if that's where it is, probably in the middle of next year again, as I've said, everything should be factored in. Our elections should be behind us. So we have a clear political picture for the next 5 years, hopefully. And then we can go through the earnings and see where the growth is coming from.
Okay. Interesting. Sandeep, how does one therefore then place the bets on India? Because hitherto the last 5, 6, 7 years have been retail dominated in that sense. If we just look at the market from two funnels, which is retail versus industrials, retail has dominated, be it banking, be it discretionary or otherwise. Is it the time for industrials to start making a comeback? This result season thus far is looking positive for the industrials.
Yes. We've been saying that for some time. We've been saying that at least for the last 6 months, that it's time to look at the India industrials. So L&T reported fantastic numbers. My analyst was so excited. I have not seen him so excited for a couple of, at least 5 years. And I think this is clearly some indication that the worst is behind us. We have to see year on year and growth come through for the same name and across names in the industrial cycle. Are we at that point? Maybe we are, but it's still maybe 2 quarters of growth that needs to come through to say in certainty. So I think at this time, go for for quality plays in the industrial cycle and see where it is coming from. I still don't think that the retail or the consumption cycle is something which is run off the rails. No way. I think Maruti gives a very attractive entry point. We have some new launches coming through post Diwali for Maruti, which are important models such as Ertiga, and then we have Wagon-R in the first quarter of next year. So all these models can definitely raise earnings, volumes, and ASPs for the business. So that's a good thing. So I think quality names, large cap names are where we should be going. And once the political picture is clear by April, May, in the second half of this year, that's when probably the mid cap and the other high beta names could be looked at.
The fact remains that the correction has been rather stark in the mid cap and the small cap end of the market. Naturally so. I mean, the small caps are besieged with these loss-making companies, and therefore the index will fall more. But selectively, the beta, do you reckon, would be higher in quality small caps versus large caps? I mean, for somebody who can do the research, would you still shy away from the smaller names, and would you still bet only on the larger names? So
I would think that if you have a strong view on politics, then you should go for high quality mid caps. If you don't want to take the political risk, then wait for some clarity coming through. I don't think the economy is going to give you a negative surprise, but I think politics can easily give you a negative surprise. So you take your bets, and there's some things that can be analyzed. I've seen. Yeah. But some things are beyond analysis. You just have to take it and factor it when they happen. Yeah. So politics could be one of those things.
No, I was about to say, when you said if you have a strong view on politics, I was just asking who does, because it's just up there in the air as to what will happen.
So yes. Yeah. So that's it. So I think the risk is not from the economy. The risk is from events outside any predictability, such as politics. Is the currency risk right now? No. The currency was a risk. I thought the currency was too strong for the last 4 years. I think that correction is in the price right now. We should depreciate by 2.5% to 3% at least. So if in 4 years, if we depreciate over 12%, and in India we see an episode of depreciation, it happens once in 4 to 5 years, and then it is 12 to 15% in that phase. We have gone through that phase. Right, and I think the macro fundamentals, everyone who's unbiased will say that they are definitely much solid than they were in the 2013 phase, when the currency again had seen a big depreciation. So all told, I think the currency depreciation is news which is behind you rather than in front of you, unless you tell me there is going to be a big war in Middle East, and because of that oil prices shoot up, because I think the global economy is cooling off in the first quarter of this next year onwards. So the oil demand should cool off. What has happened, which was a negative surprise for the oil markets, was that Venezuela went out and then Iran went out. So two big large producers went out. Now if you tell me something happens in Saudi Arabia, then that's something which is a completely different story. And again, that's an event which cannot be predicted. So I think oil prices and the Indian elections are two events which are beyond analysis.
So value creating pockets at this juncture. I mean, while you already spoke about industrials versus retail, at Macquarie, where is the value for an investor who's coming in with fresh money?
So investors who come in with fresh money, I think there's value now in large caps. As I said, Maruti is one good name. I think we could also look at IndusInd Bank. We could also look at ICICI Bank. We could also look at Axis Bank. These are all large cap names which have gone through a phase of correction. Even for stocks like Motherson Sumi, which have taken a big beating on all kind of worries because of Europe, because of China trade war, because of many other factors. Even that is a good quality name. So there's actually value in the market, which I think anyone can can say with a clear conscience that compared to 12 months ago, there's real value in this market. It's just the case that you stick to high quality names right now until we see the end of this political uncertainty within India, and then you can look at smaller cap and mid cap names later on.
Interesting. What's the view on metals and metals related pockets, Sandeep? I mean, you know, the graphite electrode companies which have caught everybody's fancy are doing very well. That's probably a derivative of also how the steel sector does. Any thoughts on any particular themes or names within this space?
So we like metal space currently, but you tell me what's happening in China in the next 6 to 12 months. So you have a certain view that China will still continue to grow at 6.5%. If that is something which you believe in and which actually happens, then the metal names will continue to perform.
You guys have a very good coverage on commodities, which is why I thought you'll be.
So we are in the camp that there will be stability in the metal market. But again, as I said, these are events beyond analysis, because there could be something moving in the political space in those countries, and if that changes, then the markets and the growth trajectories may change. Right now, it's very clear that China doesn't want to slow down its economy beyond 6.5%. So if that is where it is, then I think the metal space, which is what our call is, will also hold up. But there's always an event risk in these kind of names.
Interesting. You sounded fairly bullish on autos. If Escorts numbers are anything to go by, the festive season delay hasn't hurt them. Maybe it wouldn't, but it hasn't hurt them. Do you expect the rest of the pack to follow suit?
I think the festive season, it is later this year than the last year. But festive season is like 3 months in a year, okay? And for the full year, we still would be growing at 10% plus in terms of two-wheelers. The real challenge has been the background in terms of interest rates going up in India and fuel prices going up in India, and therefore people feeling that the propensity to purchase two-wheelers and four-wheelers will be less. That has also come through in terms of stock prices. So from here on, I think autos are continue to be a good story. In fact, I think as far as manufacturing in India is concerned, something which India does well in the manufacturing sector is the auto sector, and that's where we have, because of big buyers such as Maruti, we have a cluster of auto ancillaries which have grown with such high quality names such as Maruti, and therefore it's an investable universe in the manufacturing space, and therefore autos is something that we continue to remain bullish on.
Okay. IT is a pocket up until now because of the currency weakness. That was considered to be a big tailwind for IT. But, you know, post the results, most managements have come and said that they've not really received the benefit of that because they already hedged themselves closer to about 68 to the dollar. In the medium term, do you see things play out differently for this segment?
So I think it is very simplistic to assume just because the rupee falls that it will it will reflect in the revenues or in the earnings of IT companies in the next 6 months or 12 months. On a rolling basis, it will reflect, but it will be probably after the hedges expire and new hedges come into play. On the meantime, there are some other structural factors which are happening. It's more difficult to get to the H-1B visas and getting more expensive to do that. There's a lot of hiring which is happening onshore rather than offshore. There are also challenges in terms of where the business model is headed. Are we just going to do a labor wage arbitrage, or are going to do some value add, which is something which the IT sector has to do? It's a 10 to 12% compounding story. You have to buy it and assume that you will get those kind of returns over a longer period of time. And therefore, I think it should be part of every portfolio because you don't have corporate governance issues in the IT space. Which some of the other sectors have. We had like 4 years of bad news in the public sector banks, right? If you had invested even in that space, you would have made money in the IT space compared to the public sector banks. So you have to weigh what risks you are ready to take. Are you ready to take a corporate governance risk and bet on high beta and bet on no event going against you and go for a big multi-bagger, or you want a 10-12% kind of return story? And IT falls in that category where corporate governance is much lower. And so to that extent, I would think you should always have between 20 to 25% of a portfolio of a large diversified nature within the IT sector.
Okay. So by the way, just 30 seconds, Sandeep, because Bank of Baroda management is ready, but we have the state run coming up. Just quick 30 seconds. Are you bullish on the PSU banks?
I think from here onwards, we should be bullish on PSU banks. The biggest change which has happened is the bankruptcy law which has kicked in place, and today lenders can control assets which could never happen, and promoters have therefore an incentive not to game the system and completely put the bad debts on the banking system, which is a good thing. And if the public sector banks can continue down the path, then clearly this is a good point to get in.
Well, let's try and see if PS Jayakumar has to echo the same sentiment. Bank of Baroda is on the path to recovery. The state-run lender, which is in the midst of a three-way merger, has seen an improvement in asset quality and lower provisioning for its standalone accounts. So will the trend hold once the merger is complete? Yatin Mota caught up with the bank's MD and CEO PS Jayakumar and started off by asking him about his take on the asset quality in the coming quarters.
As far as the slippages is concerned, barring for one exposure of about 500 crores, the rest of them are fairly granular in nature. And as far as we go into the next quarter, we have to see how these things move around. But I think by and large, we stay with the guidance that on a quarter-on-quarter basis, we should see a reduction in the net absolute amount of net NPA, a continuing growth in a balance sheet resulting in a lower NPA to asset level. That broadly is what I would think is the direction we are heading towards.
Okay. And sir, with respect to the NCLT, provisions and the NCLT cases, how is the bank really progressing, and what kind of a provision you have already provided for such cases?
But that we have provided in the disclosure. If I recollect, the average provision are on the 68 or 69% level, somewhere in between. Now, as you know, in the NCLT is a matter of a court judicial process. The overall view that is emerging is that in this quarter as well as the next quarter and subsequently we should see acceleration in the settlement as some of the legal issues are getting much more clearly defined. I mean, are getting resolved. We are not, for most part, in a very predominant way, we are not leaders in any one of these consortium. As a result of which, we are not. What I'm trying to say, it's all going to depend upon how the NCLT is going to get resolved. But overall, the sense is we should see an acceleration in the settlement. Outside of the NCLT as well, we have a fairly large level of NPAs, in the sense approximately 40% of the total NPAs are a subject matter of NCLT proceedings. The balance 60% or not, and we have therefore continuing to work on these assets to ensure recovery and upgradation, and therefore provide us with the ability to absorb further slippages.
Okay, good to know that, sir. And there is a lot of speculation and a lot of volatility in the NBFC space. If you could tell us, what is the exposure for Bank of Baroda with respect to the overall NBFC sector, and more importantly, if you could disclose as to what is the exposure for Bank of Baroda with respect to IL&FS Group.
Yeah, I'll answer both of them. As far as the first item is concerned, our exposure to our lending to NBFCs, they are, as a matter of fact, fully disclosed in our financial results. The total exposure as of the end of last quarter was 72,000 crores. Viewed over the earlier quarter, the numbers are more or less stable, with the exception of the fact that we have extended further additional credit to some of the public sector-owned non-bank finance companies. Now, view is based on the repayment history we have, together with additional data that we have secured for ourselves as a part of a continuous monitoring process. We do not at this point of time see any risk to these portfolios. They are all lent to companies with high credit rating. They're carefully structured, they're granular risk, and therefore on the balance we are comfortable with respect to the non-bank finance company exposure. Coming to the exposure with the IL&FS is concerned, we have 15%, our exposure of approximately 15% is to the NBFC companies and to the ITNL holding company. The balance 85% is with respect to SPVs. CODs in all but one project in Middle East have been accomplished. We don't see any risk in the completion of the remaining project. Cash flows are being received. The accounts are all fully performing, and most of them are good quality assets, as a consequence of which we feel the downside risk with respect to the SPVs are very limited. And so overall, that's really the position. We have taken a certain amount of provision on the exposure to the parent company on the standard line, because these are not accounts which are NPA, so we take the provisions on the standard provision side. We need to watch this position. But at the end of the day, we deal with a total portfolio of NPAs we have got, and we deal with the total book of loans we have got. In any particular quarter, there could be slippages, as you know, and then there are recoveries. And so the overall position we have got, which is that we expect to see net reduction in the absolute amount of NPA, and therefore an improvement in the net NPA ratio would continue to be the view. Obviously, if the IL&FS exposure to the parent company slip, then that is indeed a negative news. But on an overall basis, I think we would be staying to the plan, to the guidance that we have been communicating so far.
Okay, good to know that, sir. And with respect to credit costs, how do you see it shaping up for the bank in the coming quarters?
The credit cost is on the decline, and my expectation is in the 2019-2020 scenario, we would expecting it to be lower than 1%.
Okay, and sir, one final question on the merger with other PSU banks. In terms of timeline, have you heard anything further from the finance ministry or the government? And also, before the merger, do you expect some capital infusion in these entities, including yours?
No, as you know, the merger process follows a certain course because of the way the law is, on account of the way the merger process under the regulations get placed. So there are various steps to be taken. Our expectation is that this merger formality is subject to approvals from appropriate regulatory authorities should get concluded by the 31st of March. But we are at the very early stage of the merger process, and therefore, besides this, I do not have any additional information to share. Insofar as capital requirement for the merged entity is concerned, clearly, in order to get capital, we have to make a justification and a business case for that. And the government's position on this has been that adequate capital will be made available, of course, subject to us making a good business case for the receipt of capital. And that's been the consistent position the government has been articulating from time to time. So that's really where it is. We are making a 5-year plan, or we should be completing a 3 to 5 year plan, based on which and based on the on all the data that is available across the bank. We would make a business case as to the extent of capital that is required. We've obviously indicated a broad range of where the capital projection is likely to be, and whatever discussions we have, the position of the government has been that since the entire objective of the merger is to create a stronger and a much more, which is better than the sum of the parts, capital would be available in natural course. That's really where it is at this point of time. There's nothing more specific again I have to share with you at this stage, because this is still a work in progress.
Good news, guys. Got a promotion and a damn good raise.
Congrats, beta.
Congrats, मेरी तरफ से भी.
From mama too.
वाह, raise? अब तो इंश्योरेंस पॉलिसी ले ले.
इंश्योरेंस? कौन सी कंपनी से लूं?
सोचना क्या? चूज वही जिस पर हो पूरा भरोसा.
वीरू, go for convenience. My company is online, quick and simple.
बेटा, but policy समझाएगा कौन?
वेबसाइट पे सब है पापा. I can even call and ask.
क्लेम सेटलमेंट का रेशो क्या है? मेरी कंपनी का 98% से ज्यादा है.
That's good, but आज की generation wants everything online. Easy premium payment options, loan facilities और wide range of products.
अरे पापा दीदी, I will decide. Just send your links now. तुम दोनों भी ना. Same choice. LIC.
LIC trending with times. 62 सालों से हर जनरेशन की पसंद.
Anything and everything about your investments. We're just a touch away. Monday to Friday at 12:30 p.m. only on Bloomberg Quint.
Back with Indian Open right here on Bloomberg Quint. Flat day for the Indian markets, but L&T is on a roll. That stock is up about 6% in trade, giving company our stocks like Yes Bank and others. But Escorts is the company in focus. It's posted a strong quarter aided by volume growth in its key tractor segment. What caught the eye is the robust expansion in revenues from the construction and railway equipment segments as well. Add to that the numbers that came out just 15 months ago, not too bad either. So to decode all of this, joining us on the phone line is the Chief Financial Controller at Escorts, Mr. Bharat Madan. Mr. Madan, good having you. Thanks so much for joining in. We were debating about whether to start with the quarterly numbers or start off with the October sales numbers that came out. Let's start off with the sales numbers. Put that into perspective. Better than what you would have thought earlier?
No, I think we're all expecting a very good third quarter because Q2 was muted for the industry and even our growth in the last quarter was not very high, and we only about 3-4% sort of growth number we've seen in Q2 because the issue of the festivity season getting postponed and some GST transition issues. So I think the numbers which you're seeing happening in this quarter or this month also has been, I think, very much in line with what we expected it to be.
And you know, the expectations were, Mr. Madan, that October could have been a slightly soft one because of the delayed festive season, and November will be a stronger month. So are we on track for a fairly strong November as well?
Yeah, so definitely. So Diwali normally, I think, is normally a very strong period, but Navratri are equally strong. I think it's a split is roughly 60-40. So I think usually 60% volume happening in October and 40% only getting shifted to Diwali month. So let's see. I think we're all waiting for Diwali season to go. I think then probably we'll be in a better position to talk about the entire industry numbers, how it's going to look like for the full year.
Are you going to be taking any price hikes ahead of that, sir, in light of the higher raw material costs?
So we've already taken 2 price increases this year. And yes, we will be looking at another price increase, but maybe after the festive season is over. So maybe end of next month or beginning of December.
If I may ask, what quantum are you looking at? How much in terms of a price hike?
So it'll be closer to 1%, which is the cost increase you've seen happening in this quarter too.
Okay, let's talk about your quarterly performance, and the 2 segments that have really done well for you is the construction equipment segment and the railway segment. Could you throw some more light on the performances of these segments and the future outlook thereof?
Well, I think on construction, the growth momentum continues. So normally you have a lower H1 and H2 is pretty strong in construction business, and probably we'll see better numbers coming in the coming 2 quarters too, I think, on the construction business. So overall, we are giving a guidance of upward of 30% growth in the construction segment on a full year basis. And then the same story, I think, continues for railways too. So railways, again, we had very strong order book today, sitting at 400 crores plus order book on the railway side, which will get executed in next 12 to 20 months. And so far in the first 6 months, we gained 40% plus growth on the railway side. So though the growth may not be same as 40% in Dallas 6 months, but still overall, I think growth still looks at somewhere between 25-30% on the full year basis.
That's just for the construction segment?
For the railway also. So construction is saying 30% plus, because railway will be 25-30% for full year.
And will happen at better EBIT margins too, because I think this quarter too, there's been a slight expansion in the EBIT margins for both these segments.
Well, in railway, we actually slightly lowered the margin in this quarter compared to the sequential quarter in first quarter, because of some product mix, because we are now getting into the position where our new product sales are increasing gradually, which is what leading to the top line growth in railway segment too. Where initially the margins will be low, though I think in another 5 to 6 quarters, the margins will come in line with the normal margin level in the railway segment, because there's a lot of import content right now in the initial new product which we are supplying. So that's leading to slightly lower margin. But I think overall the margin for this year still be better than by 200 to 300 basis points better than last year on the railway side.
Mr. Madan, just one, before we move on to the tractors business, just one routine question. With commodity costs doing what they are doing, in order to maintain margins, would there be a necessity to take price hikes, or would higher volumes also partly offset that up cost?
Well, I think a mix depending on what segment we're talking about. For example, in tractors, we've been able to pass on the cost increases to the market, but in construction, we are not able to do that. So we are facing issue and we are absorbing a bit of the cost because the growth rates are very high there. So absorbing that sort of cost impact is not looking easy in the market. So that's something which is slightly putting a pressure on the construction segment margin for us, which is where you've seen, I think, in the Q2 also the margins were more or less flat to last year. So we're not able to really get better numbers there. Though we are taking price increases there too, but it's not fully enough to absorb whatever cost impact is happening on material side. Though on tractor side, we are able to absorb, which is the major business for us.
Interesting. How did the realizations in the tractor business shape up in the quarter gone by?
So the realizations went up because we had taken a price increase in second quarter, which was closer to 2.5%. So that's what actually led to some better price realizations. And overall, we see, I think, going forward too, I think if the trend continues, where we are expecting another price hike to happen in somewhere to the end of this quarter. So hopefully things should look better there on the realization front too.
So, anything that you feel over the next few quarters to come that could probably hamper or derail these projections of growth that you've just put out?
So like I said, we'll keep our fingers crossed till the Diwali month is over. So I think November is very crucial. So these 3 months, September, October was very crucial months for this entire year growth for the industry. So the September was more or less flat month because of the delay in the festive season. But October, at least in our markets, we've seen good growth happening. So the rural demand on the ground remains strong. So I think whatever factors you look at from the rural side, whether it's a good yield, which we've seen happening in the Kharif time, and even now the Rabi season looks like going well now. So we expect the next 2 quarters should be good for the industry. Then your water tables are good. The rainfall distribution has been pretty decent. The prices are better than last year, so there's better purchasing power in the hands of the farmer. So I think overall macros as of now for the rural sector, at least for the short term, looks very promising. Though we can't say really what will happen in next year. I think when you go to a better changing scenario and the election coming in and the next year's monsoon prediction, how it really goes. So maybe we'll have better clarity on the next year's numbers towards the end of this fiscal. But at least for the next 2-3 quarters, we think the story will continue.
And do you feel that the continuous increase in the raw material costs will continue to remain an overhang in the upcoming quarters?
Yeah, at least our internal projections say at least for these 2 quarters will be under pressure, at least for this fiscal. And then obviously depending on how the industry reacts going forward, if there's a slowdown happening generally in the auto sector, which we're seeing happening in many other sectors, it's been observed. So there obviously the suppliers will be under pressure, so maybe we'll be able to neutralize some of the inflationary impact there at that time.
Okay, Mr. Madan, we'll leave it at that. Thanks so much for joining in today, and all the best for the festive season.
Thank you.
Or festive season part 2, I might add. As Bharat Madan of Escorts throwing some light on the numbers. Let's throw some more light on another set of numbers, and that's HEG. It's on a roll, really. Net profits for the quarter did very well, about 8 times growth for the net profits on a year-on-year basis. I think the revenues too had some expansion. Margins also expanded a little bit in the session, in the quarter gone by. The performance was predominantly led by the outperformance in the graphite segment. Let's discuss the quarter gone by with Ravi Jhunjhunwala, the Chairman and Managing Director of HEG. Also joining in is Nikki Mirchandani from our research team to take it forward. Nikki.
Thanks, Neeraj. Well, good set of numbers put in by HEG. I'm going to start off by asking Mr. Jhunjhunwala about the power business division, which has seen some kind of decline coming in both in terms of the revenue as well as the EBITDA performance. I'd like to understand what goes behind the decline of these numbers.
No, the power business within the company is very, very small, and I'm guessing what your question is, where there is a part of our power business which is something to do with hydro, and that hydro plant typically only starts operations in the second quarter, and that did not start this year because there were no rains in that area. So that plant did not work at all in the entire second quarter. It has just started operating about a week ago. So if that is the one that you are talking about, then this is the question. And the second part, which I'm presuming you are asking me, is in addition to that, we have about 65 megawatt of coal-based plant, where we have been able to negotiate a better price from the electricity grid. We were buying at, let's say, X price, which was much higher than the price at which we were generating our own power. Now, Electricity Board has agreed to give us a price at which we have closed down half of our coal-based power generation, because our own cost of generation is now higher than the electricity grid. So that may be the reason for that division not showing as good a profit as last year, but indirectly that has meant a higher profit in the graphite division. So as far as the company itself is concerned, I don't think that has made much of a difference.
All right, Mr. Jhunjhunwala, I do understand about your power business, but I'd like to understand a little bit about your margin sustainability, which for the present quarter stands around 76%. I'd like to understand how much can we expect going forward in the second half of the financial year?
See, as far as the current quarter is concerned, we don't think we should we will have any problem. We are more or less booked for this quarter. As far as going forward is concerned, we are more or less taking a quarter at a time. We are not yet certain about January, March, but because we are not yet in the market to sell the electrodes, which has been the pattern in the last 4, 5, 6 quarters, where we have been negotiating our orders on a quarterly basis in most of the times, and in some cases it is half yearly. So the current quarter looks as good. The next quarter we don't know because we have still not started selling. But given the market condition, we believe we should be able to more or less be in the same region.
Sure. Importantly, I'd like to know a little bit about your capacity utilization level, given that I believe it was 82% in Q1. Are we looking at the same level or a 85 plus percent kind of a figure?
As against 82, this quarter, which is the second quarter that we are talking about, we are a little over 85%. And the current quarter is likely to be a little over 90%.
All right, talking about the dividend in that case, the street doesn't seem to be much happy with the 30 rupee kind of dividend that the company has given out. It seems to be minuscule as compared to the stock price that we're looking at around the 4,200. Analysts were expecting a higher figure given the profitability of the company. I'd like to understand your plans to enhance shareholder value and if we could look at further dividend payout going forward.
No, I'd like to clarify. We have always maintained that in the last 10, 12 years, if you look at our history, we maintained a payout ratio of about 35, 36, 37%. And we will maintain the same percentage of 35, 36, 37%. And as I was just talking to somebody else, we are going to give something away every quarter. So this is just the beginning. This is just the payout in the first quarter, and there will be something happening in the second. There will be something happening in the third. I'm sorry, second, third, and fourth, which will all combined will still be in the ratio of about, in the region of about 35% payout.
Mr. Jhunjhunwala, your realization stood around at that average of $15,000 per ton during the quarter. How much can we expect going forward in the second half of the financial year? Are we expecting some sort of gains from the level that we've seen in the first half?
So again, normally we don't speak about the exact number, but yes, you are in the ballpark.
All right, I'd like to know if the company has been able to undertake any price hike for the month of October, and how is the demand scenario panning out going forward?
So the demand remains very strong. The demand keeps increasing, and since the structure of the industry is such that there are not too many players and nobody is putting any new capacities, and new capacities, even if once they are announced, they take a very, very long time. So the demand-supply imbalance is still continuing to be there.
All right, talking a little bit about your important needle coke issue, I'd like to understand the availability around the same, and has the situation eased going forward?
You see, a little bit of debottlenecking that one of the largest needle coke player was talking about, that has happened. And we've started getting some coke out of that. So to that extent, yes, the availability has increased, but the demand still is outstripping the supplies. I mean, we could do, what I'm trying to say is we could do with a couple of more 1,000 tons of needle coke if it was available.
All right, Mr. Jhunjhunwala, the last question that I have for you is about EBITDA per ton for the quarter. I'd like to understand the number for the same, and what can we expect going forward in the second half, factoring in the kind of input pressures that you're witnessing right now?
No, it won't make much of a difference. I mean, as I said, the needle coke is always purchased on a 6-monthly basis. So whatever cost of the needle coke we had in the previous quarter, it's not going to materially change in the next 3 months.
All right, Mr. Jhunjhunwala, thank you so much for your time. Indeed, a pleasure talking to you as always. Neeraj, back to you. 2 takeaways that I'd like to highlight. Margins are expected to stay around the 75 level going forward in Q3, and the realization is expected to be around that $15,000 per ton range. No cost pressures coming in as of now for the company. Pretty much the same.
Doing okay. HEG, thanks a lot for that, Nikki. Bring up that stock also for our viewers, 3.5% higher for HEG. And then, of course, the markets by themselves, very, very flat. Hardly any move there. The Sensex is just about 37 points down, so no movement there. The Nifty about 0.2% and the Nifty Bank staying slightly afloat. I think L&T, probably the only stock which has actually had some serious gains in the session today. Otherwise, IT and the other companies have come off and a bit muted in trade.
Well, on that note, it's a wrap on this morning edition of Indian Open. Thanks a lot for watching. We have a lot more market action coming up on the FNO show.
Good news, got a promotion and a damn good raise.
Congrats, बेटा.
वाह, रेज? अब तो इंश्योरेंस पॉलिसी ले ले।
कौन सी कंपनी से लूं?
चूज वही जिस पर हो पूरा भरोसा.
That's good. But आज की जनरेशन wants everything online.